Welcome to this video. Today we're going to talk about Nvidia. We're going to do a deep dive stock analysis in this company that's on the forefront of AI. In their latest earnings, Nvidia announces financial results for the first quarter, fiscal 2026, so the first quarter in 2025. And we see that there was a revenue of 44.1 billion, up 12% from the last quarter and up 69% from a year ago. That's an insane amount of growth, which is really great. If we look here at the charts, we can see that right now Nvidia is a $3.3 trillion company, and many investors think it's too late now. I should have bought a few years ago. It's such a big company. Can it even go bigger? It's already $3.3 trillion. And today we're going to find out uh, if this stock is still a great buying opportunity, what the true value is, what the intrinsic value of the company is, whether the financials are still strong, and how Nvidia is positioned in the AI gold rush. Let's find out in this video. Why has Nvidia grown so much in the last few years? Well, if we look at this chart, we can see that the AI search term on Google Trends went exponential in 2022, 2021. It goes straight up, and the demand is insane for AI. The development is crazy. It really is the gold rush of the modern day age right now. It's like in 2000, the dot-com, before the dot-com bubble, that everyone was talking about websites, internet, and everyone was trying to make money of that and now it's AI is the new thing. So how is Nvidia positioned in the current AI gold rush? Well, during the gold rush, who really makes the most money? The gold diggers, the people who are searching for the gold, trying to get the gold, or the people who sell the tools, who sell the shovels to the gold diggers? Well, a lot of times during a gold rush kind of situation, the people who sell the tools actually have the most stable income and the most predictable income, because from all these gold diggers, there's only like a few that make a lot of money, and a lot of them they just lose. Well, in the AI gold rush, the real winners sell the tools, but the biggest rewards go to those who strike gold. But you don't know really who's going to strike gold. For example, right now there are so many different chatbots: ChatGPT, Gemini, Copilot, DeepSeek. There's so many, and they are pretty much on the same level. Really, they're competing to get the most market share, and it's difficult. And we don't know in 10 years what's going to be the largest chatbot. And I will predict that after 5-10 years, that there will only be one or two chatbots that everyone is going to use, and the rest will lose. Media is positioned in a much smarter way. Let's look at the graph here. Let's start with TSMC. TSMC, Taiwan Semiconductor, that's like the biggest factory that makes chips. They just manufacture the chips. Then Nvidia buys those chips and they design those chips and they sell the GPUs, the hardware, to the gold digger. So Nvidia is focused on design and also software. They use software and the hardware, their graphics cards. And to combine them gives them an edge, and they are very efficient and fast. And these massive companies, they need those. So all these companies that are working on AI, they need Nvidia's graphics card. So as long as Nvidia can focus on making the best cards and the best software, they will make money. And Nvidia and TSMC are much more in a better position in this in a more predictable position if we just simply look at the AI gold rush. So let's have a look at Nvidia's corporation's revenue share by segment. Let's see how where the money really comes from, how Nvidia makes money. Well, here we can see that the majority of the money comes from data center, 115 billion, 88%, and gaming 8%, and then automotive, small other things. But if we look back in time, we can see that it used to be all gaming, And now, because of the AI boom, everything is data center. You can see here it was first 55%, 78, now it's 88%. So the majority of the revenue comes from data center. But what does data center means? So Nvidia data center revenue is basically hardware, a combination of hardware and software. They sell their perfectly designed graphics cards like the H100, the A100, B100 AI chips, and they combine it with their own custom software, CUDA platform, and it gives a developer lock-in. So once a company, so like Google, uses these software and hardware from Nvidia to run their AI business, they're kind of locked in because they are dependent on the software to because they need the software to make the hardware run well. And yeah, so it's difficult for Google to switch to another one, and that's a great lock-in effect for Nvidia. And these are the key customers: Google, Amazon, Microsoft, Meta, OpenAI, Tesla, and thousands of AI startups. Everyone, all the gold diggers, all the companies that try to get market share of the AI demand at the moment. So thus, Nvidia has a strong economic moat. An economic moat, often attributed to investor Warren Buffett, is a term used to describe a company's competitive advantage. Like a moat protects a castle, certain advantages help protect companies from their competitors. So essentially, is it what makes Nvidia have a strong competitive advantage? Do they have it? Like, what makes it difficult for other companies to compete with Nvidia? Well, let's find out on this moat analyzer, economic moat finder. We can type in here the ticker. We can analyze the moat. And we can see that it is an 8 out of 10. So the moat is pretty strong. And it's intangible asset 5 out of 5, switching cost 3 out of 5, network effect 4 out of 5, cost advantages 4 out of 5, efficient skill 4 out of 5. So it's a pretty strong moat. So Nvidia has a strong advantage because of its powerful chips and trusted name. Its special software, CUDA, and advanced GPU designs are used in AI, gaming, and cloud computing. These tools are hard for other companies to copy. Big tech companies like Amazon and Google and Nvidia use Nvidia to train AI. Nvidia also saves costs by making chips at a large scale. So yeah, it's a pretty strong mode, and I really think that they also have the brand name. Everyone is like Nvidia, 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 Nvidia. It's a kind of like Bitcoin. Everyone's Bitcoin, Bitcoin, Bitcoin. That also helps. Like it. So yeah, it has a strong mode. It's popular. The stock, the ticker is very popular. People have heard of it. It's everywhere in the news. Um, but right now the market cap is 3 trillion. So let's see if it's still cheap right now or not. We're using a discounted cash flow method of 20 years, and we are going to use Warren Buffett's owner's earnings formula to get the earnings that are really for the shareholders. So we're going to discount 20 years to present value to find its true value. So the stock name is Nvidia. And the net income is the earnings the last 12 months. And then net income plus depreciation amortization minus capital expenditure plus minus change in working capital. That's basically the owner's earnings. So we're going to use that. All these numbers I found most of them I use for TradingView. Here at the statements, so income statement, balance sheet, and cash flow, you can find all the numbers. Like for example, net income, you want this number, the last 12 months. Here, I put it here on annual, but it doesn't matter because we look for the TTM. And the net income is 76.77. So we go back to our calculator, 76.77. And so I fill everything in. Current market cap, shares outstanding, and the earnings growth rate I find on Finviz. So here we can see the market cap in the 3.297 trillion, 3,200 billion. Here we can see shares outstanding 24 billion. And this is the most important. This is like the expected earnings growth, because that's really important if you want to calculate the intrinsic value using future cash flow. How much is the company going to grow its own earnings every year? Well, if we look at the past 5 years, it grew with 91.83%. It almost doubled every year, which is insane. And they expect for the next 5 year to grow 29.81%. So for my calculation, I will make it 25% to be a little bit more conservative. And for the next 5 years, so let's go back to our calculator. So for earnings growth rate, we do 25%, and it's for the next 5 year. So this calculator will calculate for the next 5 year, it will grow with 25%, and the last 15 years, it will halve. So 12.5% return. So we use a discount rate of 8%, which is quite high, but that's what they use for high growth tech stocks like Nvidia. So let's calculate the intrinsic value, and we can see that it's fairly valued or slightly undervalued with a potential upside. So despite the massive growth and despite that the company is over $3.3 trillion, it's still actually a good buy. You're still buying a great business at a low cost, which is very interesting to see, because they grow so fast and they have so much potential. That's why based on this model, we can see that it's 30.7, and they say the true value per share is 162. If we look here at Nvidia on Guru Focus, we can see that even they say that it's undervalued, modestly undervalued. If we look here, they will say that the true value is $190. So we had like 160 something. So despite this massive market cap and the enormous growth in the last 2 years, it's still undervalued and a good buy according to Guru Focus. Let's also look quickly at the financials. We can see financial strength 9 out of 10, profitability rank 10 out of 10. This is like a pretty close to a perfect business. And we can see here if we look at the revenue, it has this crazy exponential line, which is really, really great. And here it's also interesting that the net income is over 50% of the revenue. And that is a pretty good sign, because they have like a lot of extra cash. They can do buybacks, pump up the stock. They have a lot of excess cash because they run on really good margins with their business model. So now we're looking at the charts of Nvidia. We know it's a great company. We know the fundamentals are strong. It has a strong economic moat, and it's undervalued. So buying right now should be good, right? Well, let's look at the charts. And we can see here on weekly candles that it's still in a strong uptrend. This was like a much better time to buy, of course, but right now we have to zoom in a little bit to see if this is still a great entry point. And we can see that there was a death cross here, which means like the 50 crosses below the 200 simple moving average. And yeah, you can see a downtrend, but it broke this trend line here. And we can see that here this was like kind of a breakout pattern, and it also went above the 200 simple moving average. And now it's hanging a lot of days above this moving average, which indicates that there is a high probability, because also combined with the strong fundamentals, that maybe we test the moving average again, and then we will go up. So we put our value at like 160. That was our conservative value. Guru Focus said 190. So let's say 175. I think we can get there in like a few months, maybe 1 month, 2-3 months, at least at the end of the year. We will go around in this range. That's what I would predict. So yeah, if you don't have any Nvidia, I think buying right now, just if you just start with a small position, I think it's fine. This is not a bubble. Of course, Nvidia has a lot of volatility in the past, so it goes up and down. But it's not that you're buying a bubble stock. This is just the high price is rationalized by the extreme amount of growth of its earnings. So yeah, buying right now is good to add to your position. Always, of course, do your own research, your own due diligence, and make sure that you understand the risk when adding this to your portfolio. But yeah, I think it's a great company. I think I think in short term it also will go up. And yeah, I would say that around 170, that will be the value it will be in like a few months. Of course, there is always a probability that this stock can collapse. Uh, but no worries, it will eventually bounce back higher. That's high probability. So owning Nvidia is a great choice. Right now, it looks very bullish to me. Of course, this is not investment advice. This is just educational purpose only. Always do your own research. Make sure that you double check everything before. Yeah, so again, always do your own research. I hope you learned something. Thanks so much for watching, and see you in the next video.